Great. Thank you so much for the kind introduction, Lauren. So I'm an independent diamond industry analyst. So my job is to kind of take in as much information as I can get, to process it, and then to come to some sort of conclusion that hopefully provides value to stakeholders within the industry. So I'm going to just take you through kind of what I'm seeing play out in the industry, and then kind of what I think is going to happen going forward. Thank you. So the last 4 years have been highly, highly unusual in the diamond industry. We went through a boom period in 2021 and 2022. I would attribute that to all of the economic stimulus that was provided to people during the pandemic. People had money, but they couldn't go out, and they couldn't travel, they couldn't go out to eat, so they bought luxury, and they bought diamonds. Diamonds did especially well. We had record diamond demand in 2021. And then, fast forward 2-3 years, and we're kind of on the other side of that. People bought enough diamonds for a while, and people kind of went back to spending money on more, say, experiential discretionary things like traveling and going to entertainment events and that sort of thing. And then in addition to that, there's just been a significant slowdown of luxury demand in China. And China was the diamond industry's second largest consuming market. And 2024 demand for diamonds was down anywhere from 25 to 50%, depending on the metric you look at in China. So that's kind of been a major catalyst the industry is dealing with right now. And then the emergence of lab-grown diamond jewelry and how that's competing with natural diamonds. That's been something that's been playing out for maybe 5-6 years on a more mainstream level. But we're getting to a point where there's just a lot of, I think, uncertainty within the larger trade in the industry on how this is going to ultimately impact the industry. And there's lots of emotions and lots of different opinions on what the industry should and shouldn't do as it pertains to this. And then, in addition to that, there's, Western sanctions on Russian diamonds because of the war in Ukraine. Russia supplies historically a third of global diamonds. So that's been a major industry development as well. So it's been a highly unusual 4 years for the trade. Some people in the industry say this is the worst downturn that they've ever seen. People that have been in the business for 40, 50 years. I don't know if I'm that pessimistic, but I think if you're on the front lines, it's been a painful period, the last 2 years in particular. This is a rough diamond price chart. This is a proprietary index that I produce. Just to give you an idea of the volatility. So we had the global financial crisis on the left end. You can see prices came in quite a bit. And then we had this huge surge after the global financial crisis, and that was because of growth in demand in China. Chinese consumers started giving diamonds for the first time. It became more of a cultural norm to give diamonds related to a wedding gift. And it drove diamond prices to an all-time high in the first half of 2011. And then we had, pretty much 10 years of sideways market before the pandemic hit. And then again, that stimulus from the pandemic, it really drove demand for diamonds. And now we're kind of on the other side of that. But it's been a very bumpy, wild ride. But when you take a step back and look over the last, 10, 15 years, there's kind of, we've kind of had a relatively flat channel in prices. And this is with gold at an all-time high, and you had some other commodities that have been up quite a bit the last 3-4 years, and diamonds have been flat. So it hasn't been great for sentiment. I covered most of this, but again, if we're looking at natural diamond prices, I think it's important to understand that we went from, in 2015, lab-grown diamonds represented, less than 1% of the market. Today, if we look at global diamond jewelry sales, lab-grown diamonds are, 20 to 25%. So, that's had a huge impact. It's taken share from natural diamonds. And I'm going to get more into this towards the end of the presentation, but I think the industry really has to kind of decide how it wants to position itself longer term, because I think there's a lot of consumer confusion. It's resulting in diamond price deflation. There's just a lot of things happening, and I think the industry needs a more concrete plan on how it wants to proceed. Longer term, if I'm kind of trying to look at, where prices might be going forward, the U.S. is more than half of global diamond jewelry demand at, 55%. So U.S. is a huge market. China, was about 15%. It's now about 10%. India is kind of approaching 10%. That's kind of the new fast-growing market with China slowing down. And if we look at Europe and Japan, they're only about 5% each. So diamonds are still a very U.S.-centric product. Looking at natural diamond supply, and this is kind of what Kevin was talking about. Canada's the third largest producer, but if we look in Canada, there's three major mines, and two of them are probably towards the end of their life. The Diavik mine's closing in 2026, and then there's a couple other mines that have a mine life, that's probably less than a decade, and that's just a trend we're seeing throughout the world. We have these very large, legacy diamond mines, but a lot of them are reaching the ends of their lives. I mean, there's a mine in South Africa called Cullinan. That's the mine that produced the British Crown jewels. It's been in production for over 100 years. I mean, so these are very old mines, and the deeper you get in the ground, the more difficult it is to produce. So this trend of natural diamond supply declining, in the long run. You could see we had, this is rough carats. You go back to 2006, we had almost 175 million carats of natural rough diamonds produced. Last year we were at just over 100 million, and that was the lowest since the late 1990s. And then going ahead, you see this trend's going to continue. We're going to kind of be right around that 100 million carat level. So supply's down about 50%. Just over the last decade. And this is, again, it's attributed to just older mines getting to the point where they aren't as robust as they used to be. A lot of them are closing or they have less production. But then also just the fact that diamond prices have been flat, and mining costs, diesel fuel, energy costs, rubber, for truck tires has gone up. All these production costs have gone up, and prices have been relatively flat, and it's kind of making investment in future mines more difficult. On the other hand, this is lab-grown diamond production. This is also this is in rough carats to make it a relative comparison. But you can see production just exploded. You just go back 10 years, and there wasn't one producer that probably produced more than 100,000 rough carats a year. Now there's multiple producers that are producing 1 million carats. The Chinese and the Indian producers are the biggest. The Chinese historically are the ones that have produced synthetic diamond for abrasive application, powders for cutting equipment, any kind of diamond that's used in, say, laser or technical equipment. And they've been upgrading their technology the last 10 years, and now they could produce much higher quality. Gem quality synthetic diamond that's being sold as jewelry, and then the Indians have really kind of jumped on the lab-grown diamond opportunity. A lot of them are historic natural diamond cutters and polishers, and now they're actually producing man-made rough diamond, and they're cutting it themselves, and they're vertically integrated, and they've been kind of the big emerging player to man-made diamond producers. And just getting back to natural diamonds, if we just look, far into the future, if we look, 20, 30 years into the future, some people say that there won't be any natural diamonds left, and that's just not the case. This is just a sample of the mines that I still expect to be in production, kind of given the resource that's in the ground. There's a good, 10 to 15. And if these mines remain and no other mines emerge, we'll probably be at half of the current production that we have today. So I kind of look at this as kind of the core industry supply. It's a very fragmented industry. I mean, even today there's only probably 20 to 25 very large scale diamond mines. So diamonds are rare. Large economic deposits are extremely rare. It's really expensive to bring a new diamond mine into production. It takes a long time, I want to make it clear that there are, enough natural diamonds to keep the product, relevant, going forward. But I think if we do see higher diamond prices, we will see more supply emerge because the economics will improve. Just on demand, I think I touched on most of this. I mean, for me, I'm still looking at China just because it was such a large, fast-growing market for the industry that's really slowed down considerably. There's mostly macroeconomic reasons for that. China, has demographic challenges. It's getting to the point where, the older segment of the population is larger than the younger segment of the population. It just gets very difficult to continue to grow an economy at a fast pace when you have, inverse demographics like that. In addition, just at the moment, China's going through a real estate property crisis. People bought a lot of residential property, second homes as an investment, and I think we're getting to the point where that strategy isn't working out anymore, and it's starting to really backfire. So, China, I am not giving up on China yet, but it's been a really rough, I would say, 12 to 18 months for the whole luxury industry. I mean, whether it's watch sales, whether it's jewelry sales, whether it's high-end handbag sales. So I think everybody has an eye on China right now, and it's really difficult to predict what the next 5 years is going to look like there. But I wouldn't give up on China yet. This is what I like to look at this as a proxy for China. So this is Chow Tai Fook. This is the largest jeweler in China. They've been aggressively expanding. This is net new store openings per fiscal year. So you could see in 2022, 2023, they were opening almost 1,500 net new stores. And then if we look at the fiscal year that's going to be ending in March, they've actually closed about 700 net stores. So I mean, I think this chart speaks for itself. I mean, we had this fast rapidly growing market. Jewelers are opening new stores, and as you can see, for the first time in 15 years, there's going to be stores actually closed this year in China. So I think that really kind of sums up the Chinese market right now. So this is by far the most popular and the most talked about topic in diamonds. It's lab-grown diamonds. What is this ultimately going to mean for the industry longer term? What is it going to mean for natural diamonds? So I try to, as a data analyst, I try to put some of this in context. So, global diamond jewelry demand will be about $85 billion this year. Lab-grown diamonds will be about $18 billion of that. And again, just go back to 2015, and lab diamonds were, maybe 1, 2, 3% of the market. So it's grown rapidly. And it reflects increase in supply, and it reflects the fact that retailers are incentivized to sell lab-grown diamonds because the profit margins have been a lot better than they historically are with natural diamonds. You hear anecdotes from consumers, and they'll walk into a jewelry store, looking to buy a diamond engagement ring, and I mean, there's retailers that are now just fully committed to lab-grown diamonds, and they'll convince them to buy a lab-grown diamond, and they'll try to capture that, additional profit margin. But I think the bigger issue the industry has to think about is, what is this going to look like longer term? Lab diamonds are a manufactured product. The price reflects that. I think I have a chart here of lab diamond prices. So this is a chart of lab diamond price, and that kind of speaks for itself as well. And it's a manufactured product. So in theory, we could produce as many as we want in the qualities, the sizes that we want. I mean, lab diamonds are getting to the point where they're going to be made to order. If you want a particular stone, shape, size, you could order and pretty much have it at your doorstep in probably 4 months. So it's completely different fundamentals from that of a natural diamond, and the prices reflect that. But I think we have to think, if you're in the fine jewelry business, do you want to be selling diamond engagement rings that are $5,000, $10,000, $15,000, or do you want to be selling lab diamond engagement rings that are just a few $100s or $1,000 or $2,000. And I think there's consumers that want both products, and I think there's room for both products in the market. My concern is that the communication around the way they're being sold, I think, is resulting in customer confusion. There's a lot of consumers that don't think you can distinguish between the two. You can distinguish between the two. You need a gem lab typically to do that, so you can't do it with the naked eye. But they are different products. The rarity is completely different. The value is completely different, and I think they have to be sold accordingly. When I kind of think about how this is ultimately going to play out, I think we're going to get to a point where. So this is basically an analysis of margin at retail. So the gray bar is what the retailer pays for the lab diamond. And this particular example is a 1 carat VS GF 3X. If you just go back to Q1 of 2020, the margin on that diamond was 46%. So you pay $1,500 for it, you sell it for $2,700, $2,800. We're now at a point where you could buy that diamond wholesale for a little bit over $100, and it's still being sold for $1,000 or even over $1,000. So the margin at retail is very attractive, and I think this is one of the reasons this product has really taken off. In particular in the U.S. Is because that attractive profit margin. My concern is if we continue to see margin contraction, and at the right 40% profit margin, that's where you'll see typically a natural diamond sell. If we're just talking about loose, generic, unbranded diamond. If we get to that point, this 1 carat lab diamond, is going to retail for just a couple $100s. So, if that's being sold as an engagement ring diamond, again, I just think the industry has to kind of think, how do you want to position yourself? Don't get me wrong. I think there's a place for lab-grown diamonds. I think it's a great product for a great price for a consumer in the right circumstances. But I think there's a little bit too much confluence happening where they're being sold in the same display case without proper signage. Consumers are being told that they're exactly the same when they aren't, because you can distinguish. So, these are the kind of things that concern me. And this is a more extreme example. This is a 3 carat lab grown, and we're to the point now where consumers that are buying a lab grown engagement ring, they want it to be big and high quality. The thinking is, if I am gonna make the sacrifice, if you will, and buy a man-made diamond over a natural, better be big. So that 2, 3, 4 carat size is really becoming popular in say the U.S. And again, just go back to Q1 of 2020 and. A 3 carat lab diamond was selling for over $25,000. Today it's selling for maybe $3,000-$4,000. You put a 40% profit margin on it, and it's a little bit over $1,000. So this is crazy. If you just take a step back and look at that. So again, it was a huge opportunity if you're a retailer and you're able to kind of lock in these margins. But I think there's going to be longer term consequences. And I think if you sold a consumer a $25,000 lab-grown diamond 5 years ago, and today it's selling for just a small fraction of that. I think there's there could be some problems, right? And there could be just a overall loss of consumer trust in the larger category. So again, a very interesting time to be an analyst covering this industry and watching all this play out. But I am concerned that the communication about the difference between the two products is not being handled as well as it should. And I'm concerned that too many in the trade are chasing these short-term profit margins at the expense of the longer-term health of the industry and consumers. Perception of diamonds. Diamonds historically have been considered the highest end luxury product you could buy, and typically given in very special moments in life. And I think just if we conflate lab-grown diamonds and natural diamonds, I think there's a risk that the industry can kind of really lose that. Especially with younger generations that haven't been exposed to say the marketing campaigns of previous generations over the last 50 years. So I think this is kind of what I wanted to cover. Does anybody have any questions on anything more specific? Yeah, do we have a microphone we could pass out, please? Maybe we can see. Yeah, there you go. Lauren's going to give you a microphone.
I have a question.
Speak in the mic.
So my question is regarding the certification or grading of lab-grown diamonds.
Right.
And in particular, I think it's linked with the current valuation of IGI that has entered this business in a very strong manner.
Yeah.
So do you project that this level or volume of lab-grown diamonds is going to be graded in the future when the price falls, and that, for example, institutions such as IGI will have their financial results impacted by whatever way it's going to go?
Yeah, so good question. Very nuanced for the people that are real industry nerds. So IGI, it's a for-profit gen lab. It went public in India just a few months back at a valuation, $2, $3, $4 billion, bigger valuation than it's hard to even fathom. But it's based on the notion that, they're the leader in lab-grown diamond grading, and the market for lab-grown diamonds is continuing to grow, at least if you look at historic data. The problem is, again, lab diamond, it's a manufactured product. It's not rare, it's not valuable, right? And historically, we've graded diamonds because the better the quality, the larger the size, the valuation is completely different. The reason that the industry is grading lab-grown diamonds is so they can sell it as an equivalent product or a substitute product to natural diamonds. So I look at that as more of a marketing tool than anything else. Most lab diamonds are enhanced. They grow them and then they put them in a high pressure, high temperature press to improve the quality and the color. So again, the fundamental rarity is completely different from that of a natural diamond, and the grading is essentially being used as a tool to compare it to a natural diamond. The problem is the price of lab-grown diamonds has fallen so much that the cost of grading has become a larger and larger percentage of the actual cost. So if you have say a 1 carat lab diamond, and it's say that the material itself is only worth $100 and it costs $25 to $50 to grade it, the grading is becoming a huge component of the cost. So I think it's a very good question. I think it's something to think about. My concern is that I think as this product evolves further and if prices come down even further, and if the industry wants it to be the lowest price possible, they may cut out the grading because it's becoming such a significant part of the overall cost. So we'll see. We got to the point where it's amazing how many lab diamonds are being graded, but again, I think it's more being used as a marketing tool. Did we have a question? Can we pass the mic over here, please?
Thank you for the fascinating statistics. I have a question. You mentioned that out of 30 million produced lab-grown diamonds, 100% is used for jewels.
Oh, yes.
On the other hand,
right.
Out of 110 millions of mined natural diamonds, only 40 to 50% or 50 to 60% are used for jewels. What happens with the rest?
Right, no, very astute observation, thank you. So basically what I'm saying here is this is natural diamond production, this is rough carats, but out of these diamonds that are produced, only I would say about 40% are gem quality, then you're gonna have 10 to 20% are near gem, sometimes sold as jewelry, but then all of the rest is just industrial quality diamonds, and it's a byproduct. Nobody mines industrial diamonds, the economics don't work. I would say if we're just looking at, run of mine, if we're looking at the average price of a diamond that a mine produces, it's going to be anywhere from maybe $100 to $200, but the industrial diamond's only worth like maybe $1 or $2 a carat. So it's strictly a byproduct, and it's used for industrial application. They usually crush it down, make it into a powder. If it has more structural integrity, it might be used for some other kind of more specialized cutting tool. But I think it's important to understand that, again, only half of these diamonds are actually going to be used as jewelry. whereas all of these are being produced as jewelry quality. So when you do the relative analysis, you really need to take that into account. And again, it's a different product. Natural diamond, it's a non-renewable natural resource. Man-made diamond, it's a manufactured gemstone. So it's the fundamentals are completely different. And again, this is just why I'm getting concerned that the industry is kind of conflating the two products and selling them as interchangeable when they really aren't. I think, if we're talking about, diamonds for use and industrial application, I think the consumer just wants the lowest priced option that performs the best. But with jewelry, the origin matters. I think most people would prefer a diamond that was, produced, a billion years ago in the Earth's mantle, right? So people like that. They like the idea. They like the story behind that. Jewelry is an emotional purchase. It's not a practical purchase. Luxury is not a practical purchase. And I think it's very important that the industry doesn't lose its way and doesn't forget that. And I think we're kind of getting to the point where, again, we're devaluing the product of diamond because of the confusion, because consumers are being told that lab diamond and natural diamonds are the same. And that concerns me. Yes, please.
Just a follow up to that, is there, in the production story, is there a mixed effect story as well? So the productivity of the mines in terms of gem quality and non-gem quality, is that evolving or changing in any way, or is that relatively constant?
Yeah, really good question. It's all about the economics. So it varies very much mine by mine. If you look at the Argyle mine in Australia, it produces a lot of very low quality brown diamonds, but it produces some pink and red diamonds, which are the most valuable. So, and then you just have a mine where it's more just right down the middle. They'll have, half the production will be gem quality. It will be bread and butter engagement ring sizes. So it really just depends on the mine. The Argyle mine in Australia, that did close, I guess 3 years ago now. So we're getting to the point where, again, there's basically no new mines coming online, and we do have mines closing, and that's kind of why you're seeing that overall production decline. Thanks.
Any other questions? Yeah.
Yeah, you're good.
Do you think that lab-grown diamonds are more affordable and easier to get right now? And could it stop being considered as luxury in the future? And as a result, could this lower the desirability of this product in the future?
Yeah, I think that gets to the heart of the question. I think that's the most important thing to consider. Again, how do you want to sell this product? And again, it's a luxury product, and the provenance, the origin does matter. It's an emotional, purchase, and consumers do care about that, but you have to sell it the right way, and you can't confuse them. And given that, lab diamond, man-made diamond, they're, as much as, 95% less than an equivalent natural diamond, you have to convince a consumer to pay a lot more for a natural diamond. So you have to assure them that you can distinguish between the two. You have to explain to them that the fundamental valuation, the fundamental rarity is different. And I think once the consumer understands this, they're more comfortable spending a lot more for natural diamond. And I think this is, again, where the industry really has to kind of, clear up its communication. I know the Natural Diamond Council, you guys have done a good job, but it's a big project. It's very, very difficult. And again, you have players in the industry that are really trying to take advantage of the high profitability potential of man-made diamond. I think there's a lot of communication that's confusing consumers, and it's an ongoing battle. But I think as the product matures, and I think as more consumers understand what it actually is and why it's different than a natural diamond, I think this will hopefully get easier going forward. But we're still kind of in this kind of novel phase in the product, and a lot of consumers don't fully understand what it is yet.
And what about pink diamonds? I'm just wondering, natural pink diamonds are so rare and so expensive that they're not really in direct competition, let's say, with synthetic pink diamonds. Any observations or insights there on kind of market trends? Would fancy color kind of synthetic diamonds work better because of the high prices for naturals, or any views or takes on that?
Yeah, really good question. Something I've thought about. The difference is the pinks and the reds and the violets, the blues, they're so rare. Most people haven't even seen it, let alone considered buying one. And we're talking, price points that are easily in the hundreds of thousands, millions, multi-million dollars. So completely different product. I think someone that's in the market for a $2 million pink diamond is probably not going to happily walk away with a $200 Lightbox pink. But again, I think a lot of this just has to do with assuring the consumer that you can distinguish between the two, and that's not going to change. Because theoretically, if we couldn't distinguish between the two, the price point would be exactly the same. That's not the case, but you have to think about this the way that a consumer might. And what's interesting about I know you're in this business, but with the pink diamond, it's with some of the colored diamonds, you actually can look at it chemically and actually determine, in some cases, the actual origin. I know with the Argyle pinks, they could take that gem lab and they could actually determine whether or not it's an Argyle pink from Australia. We can't do that with colorless yet. Maybe you would disagree, but I know origin it's a very different, difficult challenge. But I think if we ever got to the point, if we ever get to the point where we could look at a natural diamond and tell the source origin just based on the chemical structure, that would be very, very good, I think, for the industry.
Okay, and then one final question, I think.
Thank you for the presentation. I know that the presentation was a lot based on statistics and analytics, but since you said that diamonds are not always a more like a logical purchase, but more sometimes emotional or sentimental, and especially with the sort of varying value between lab-grown and mined diamonds, how important do you think the communication that retailers provide to consumers or customers to sort of distinguish the correct value or the correct marketing, how important do you think that'll be for sort of the future of the industry and how both diamonds are correctly communicated to the customer and to the...
That's the right question to ask. That's the most important thing I think the industry should focus on. I mean, we have to get to the point where you walk into every single jewelry store and they have a machine where the consumer can test the diamond themselves. I don't know, you have a machine, you put your diamond in and it blinks blue or green if it's a natural, and if it's not a natural, it's red or orange. We need, again, some way to instill consumer confidence that the product can be distinguished with certainty, because we can, but the consumer still, in a lot of cases, isn't aware of that. So that's a very important piece of this.
And that's where I think we can also mention Natural Diamond Council's Assure program that also verifies and audits some of the instruments that are available for this. Yeah.
Right.
Thank you very much, Paul, for
having me.
your talk and
Thank
taking
you.
these questions.